Welcome back to Quantreef. Bitcoin's trading right around $63,014, sitting almost dead center inside a tightening range, which is exactly why this spot matters. Today we'll walk through liquidity, support and resistance, VWAP, Fibonacci, fair value gaps, positioning, and where the probabilities point over the next several hours. Let's get into the chart. Price is holding just above 63,000, and the trend and structure reading is actually strong on its own, north of 80. But that's fighting against a risk-off macro backdrop and a soft order flow score sitting in the mid-40s. That tug of war is the story right now. Higher timeframe structure still leans constructive, but the immediate flow shows hesitation, which is why neither side has firm control into this print. Price is trading just above the session VWAP near 62,906, which is a mildly constructive sign for intraday buyers defending value. But both anchored VWAPs, pulled from the recent swing high and swing low, sit up near 64,003 to 600, well above spot. That means on the bigger swing, price is still trading under value, and until we reclaim those anchors, rallies remain more corrective than trend confirming. The liquidation map is lopsided. There's a wall below near 62,140 carrying roughly 1.3 billion in resting notional, compared to about 630 million stacked above near 63,578. That's nearly 2 to 1 in favor of the downside pool. Markets tend to drift toward the heavier pool first because that's where the stops and forced liquidations live, the fuel that lets price move fast. So there's a real pull lower before any real pull higher shows up. Nearest resistance sits at 62,972 on the daily and 63,147 on the 4-hour, with support stacked at 62,707 and 62,443. Given the heavier downside liquidity pool, support gets tested first in most scenarios. A clean break and close under 62,443 would invalidate the current constructive read, while reclaiming 63,147 keeps buyers in charge. There are 4 unfilled gaps stacked above price and nothing below, which tells you sellers left footprints on the way down that haven't been revisited yet. The nearest sits right at 63,150 to 63,604, with a 93% historical revisit rate on the 4-hour version just above it. Then 2 more sit higher near 64,000 and 64,600. These are magnets. Price has a strong statistical tendency to wick back into them before any real trend continues. We're inside the swing from the low near 61,778 up to the high at 66,938, and price is parked right on the 0.786 retracement near 62,882, just 0.1% away. That's a deep retracement level, and it's acting like a pivot right now. Holding above it keeps the bounce alive, losing it opens the door back toward the swing low. Volume and liquidity score high at 87, and institutional positioning is respectable near 69, both suggesting real participation rather than a dead chart. But fib location is weak at 38 and order flow sits near 45, which drags the composite down to a neutral 63. When trend and volume look healthy but location and flow look stretched, that disagreement is exactly why the overall grade reads neutral instead of leaning either way. Retail is leaning long at nearly 69%, and top traders are almost identical at 69% long too, with position-weighted longs a bit lighter near 62. Long volume over the last 4 hours is running well ahead of short volume. That's a crowded long book, which means if support cracks, a cascade of long liquidations is the more likely squeeze, not a short squeeze higher. Given the bigger liquidity pool sits below at 62,140, and the higher timeframe direction reads down, the more probable path over the next day is a probe toward that support cluster near 62,700 down to 62,140, sweeping the crowded long stops sitting there. If sellers succeed and that wall gets taken out, watch for a sharp reaction since that's flagged as the strongest resting liquidity on the board. If buyers instead defend 62,700, the alternate path is a push back into the unfilled gap at 63,150 to 600 and toward the upside pool near 63,578. The bullish structure needs a reclaim and close above 63,147, ideally filling that nearby gap, with invalidation on a break below 62 for 43. The bearish structure plays for a breakdown through 62,700 toward the 62,140 pool, invalidated by a strong reclaim back above 63,578. Either way, risk is framed around those specific levels, not a guess. So we're sitting right at a decision point, crowded longs above a heavy liquidity pool, with sellers holding a slight statistical edge but nothing confirmed yet. Whichever side takes their liquidity pool first likely sets the tone for the next real move. This dashboard keeps updating every few hours as fresh liquidity builds, so if you like this kind of objective, data-driven structure breakdown, subscribe to Quantreef and we'll see you in the next one.